Good evening, dear student. I am Vikram Singh, Assistant Professor, Department of Commerce from Mewar University. Today in this class, let's we understand accounts, its type, and golden rules of accounting. Now, this is the contents for regarding this lecture. Contents, concept of account, types of account. We have three golden rules of accounting. It is based on types of account. Then fundamental accounting rules. It is based on assets, liabilities, income, expenses, and capital. Now let's start. Concept of account. In accounting, we keep a separate record of each and individual assets, liabilities, expenses, income, equities, etc. The place where such a record is maintained, it is known as a account. So account, it is a place where similar transaction which take place during a particular period are summarized and accumulated. It is account. For example, listen carefully. Cash transaction will be summarized and accumulated in a separate account. It is called cash account. As it is same, all transaction related to a particular assets will be recorded in that assets account. Now then, all transaction related to a particular person will be recorded in that person account. So this is all about the account. Account means it is just here we classified all transaction according to nature wise. It means suppose in a particular year we have to pay electricity expenses. Every year we have to pay electricity expenses. It means in a particular year 12 times we pay electricity expenses. So the transaction related to electricity expenses, we have 12 transactions. If we mention this all 12 transactions in a particular place, then this is electricity account. As it is same, every organization have to pay salary to its employee. So every month company pay salary to employee. It means in a particular year company will pay 12 times salary. It means company have total 12 transaction regarding payment of salary. If we all transaction place in a particular area, the particular place, then this all transaction club we can say is a salary account. Okay, this is all about the account. Now after that, this is the types of account. Accounts we can classify into three types: personal account, real account, and nominal account. The personal account, it is means account related with person. We have three types: natural personal account, artificial personal account, and representative personal account. Natural personal account means any name, any human being's name related with birth, like any Mr. X, Mr. Y. You can say the name regarding the birth of any human beings. Here we name, it is named with human. Now the artificial person account means it is created by human beings. Listen carefully. Artificial personal, it is created by human beings, like any name of bank, any company name, any firm name, any educational institution name, any cooperative society, any trust. These all are created by human beings. That is artificial personal account. Now after that, third one is representative personal account. Representative personal account means this type of account represent to another account. It means suppose we take example for regarding salary account. If any amount due regarding salary, it means outstanding salary account. And as it is same in reverse case, any amount paid in advance regarding salary, then prepaid salary, advance salary. It means this prepaid account represent with a salary. This is for in reference to expenses. Now then another side, we have another side, income side. Income side we use two words, accrued income and unearned income. Accrued income means it is due. If any person receive income in advance, that is unearned income. Then any person income, it is receivable, it is due, that is accrued income. So this we have four type of transaction regarding representative personal account: outstanding, prepaid, accrued, or unearned. This outstanding and prepaid, it is a connection with expenses, and another unearned and accrued income, it is connected with income. Now this is all about personal account. Now the next, real account. This real account, it is related with assets of the business. Assets means property of the business. Here we have land, building, plant, machinery, furniture, any computer, printers, any equipment, any cash account. This is all connected with real account. Real account means it is just related with your business assets. Now, after that, nominal account relating to income or expenses. Here we have different type of recurring income or recurring expenses. It means this is revenue income or revenue expenses. Okay, for regarding this income or expenses, we create different account like rent account, salary account, wages account, discount account, commission account, depreciation account. These all are the nominal account. The main thing is here account, it is related with income, revenue, gain, expenses, losses. It is called nominal account. Okay. Now after this type of account, next let's we start the rules of accounting. Here we have three golden rules. It is based on types of account. We have three types of account: personal account, real account, and nominal account. So we have three rules, three golden rules. The first rules for personal account: debit the receiver and credit the giver. Now then, rules for real account, we have rules: debit what comes in and credit what goes out. And rules for nominal account: debit all expenses and losses and credit all income and gains. Now let's we take some small example for regarding these rules. The For personal account we take one example. Suppose we paid 5,000 rupees to supplier. Listen carefully. We paid 5,000 rupees to supplier. It means supplier. It is supplier is a receiver. Supplier is receiver. It means we have to debit supplier. Now then, the credit we pay to supplier. It means cash we paid. So here we mention cash credit. Now then, second, real account. For regarding real account, here we take one example: purchase furniture. Listen carefully. Purchase furniture. It means under this transaction, the furniture, it is comes in business. Furniture, this is our assets. This is our real account. This is assets comes in business. So this furniture we have to mention in debit. Then for regarding this purchase of furniture, we have to pay money. So credit amount, it credit means cash. Now then, example regarding nominal account. Suppose we take one example: paid rent rupees 2,000. So this rent, it is our expenses. So for regarding expenses, here we according to rules, the expenses here we mention in debit side. All expenses on losses debit. Then credit. So for regarding rent, we have to pay cash. So we mention cash in credit side. Okay, this is all about the rules. It is based on types of account: personal account, real account, and nominal account. Now, after that, we take one another rules, fundamental rules according to assets, liabilities, income, expenses, and capitals. Now the rules is for regarding assets: if assets it is increase in our business, then we have to debit. If assets it is decrease in business, then we have to decrease of our assets. Then for regarding rules for liabilities, if liabilities increase, then we have to credit this liability. Then liability it is decrease, then we have to debit. It means assets it is our debit balance, and liability it is our credit balance. Now then for regarding income, income it is in credit balance, we show in credit balance. If income it is increased, then we have to credit this income, and if our income it is decreased, then we have to mention in debit side. Then after that we have expenses. For regarding expenses, we have the debit balance. If expenses it is increase, then we have to mention in debit side. If expenses it is decrease, then we have to mention in credit side. And one more for regarding capital, this is the owner fund. For regarding capital, it is the credit balance. If capital it is increased, then we have to mention in credit side. If capital it is decreased, then we have to mention in debit side. This is the rules based on assets, liability, income, expenses, capital, etc. So for regarding these rules, we take small example. If we purchase furniture, now then if we purchase furniture, it means in furniture it is our assets. This assets comes in business. It means our assets our assets is increased. It means we have to debit this furniture. And the another part it is cash. We have to pay cash. It means if we pay cash, then the cash it is decreased. So the cash mentioned in credit side. Now then for regarding liability, we take one more example, taking a loan. If we take loan from bank, then if we take loan from bank, then loan it is our liability. So here liability is increased. So we have to credit this loan account. And in opposite side, bank account, here we mention in debit side. This is for liability. After that, the income. For regarding income, we take one example, revenue from sales. It means we sell product to customer. If we sell product to customer, here cash it is generate from customer. Cash it is our assets. It means here in this example, our assets is increase. So this cash we have to mention in debit side. And in this example, sales it is another side, our stock it is decrease. Stock is also our assets. Stock is decreased when we sell the product. So here you mention sales account in credit side. Now after that we take one more example for regarding expenses. Rent payment, we pay rent. It means for regarding this transaction, rent it is our expenses. If expenses increase, then we have to mention in debit side. So our expenses account debit. And for regarding this we pay cash. Cash means assets. In this column cash decrease, our assets is decrease. So we mention cash it is in credit side. Now one more example regarding capital. Owner invest money in a business. If owner invest money in business, it means cash comes in business. Cash it is our assets. If assets is increased, then we have to mention in debit side. So cash you mention here in debit side. Now then another part, capital. The capital in this situation, capital is also increased. It means this capital you have to mention in credit side. This is all about the rules regarding assets, liabilities, income, expenses. and capital, etc. Now, thank you.